trade, as we identified earlier. Remember, and we showed you that market that we had a nice little run up in the market. We see dojis form at pivot resistance. That generally might indicate it's the end of the run, it's the end of the trade, and the market's hit its peak maximum gain for that time session. So therefore, as a short-term trader, especially in foreign currencies, I want to heighten my awareness to that, especially knowing this information, and possibly A, tighten stops, B, cut my position and take the money and run, and look for another trading opportunity tomorrow. Let's take a look at the yen. Wow, look at these numbers. 42% of the time, a doji was formed on the low, a hammer was formed on the low. So just by focusing on those two candle patterns, 88% of the time, based on a 15-minute backtest study, the low was made by either a doji or a hammer. Let's take a look again. This statistical study reveals that only 35% of the time a doji formed the high. We have more dojis forming bottoms than we have dojis forming tops. So that's kind of interesting, and why I validated my statement, and hopefully it does for you, that the high closed doji is a very powerful reversal pattern at bottoms. The high closed doji. We see that 7% difference between when dojis form at bottoms or tops. Now with a hammer, 48% is a shooting star pattern, so combined we have 83%. Those are staggering results, and that's why I focus on just those two patterns. Let's take a look at the Canadian dollar. So this methodology's work in showing us how it works for various currencies. 40% doji low. Again, the doji top, 38%. So we're finding out that dojis form more often than not at bottoms rather than tops in the foreign currency markets. For a hammer bottom, 45%. Combine that together, 85%. And we see market reversals formed off bottoms by just studying and following a doji or a hammer. So those are pretty staggering bits of information, and I hope you find that very valuable. Now, the British pound, worst of all. Let's take a look at this. 13% of the time we have a doji low, 34% is a hammer low, and combined 46%. Now, one explanation is because of that London is the central foreign currency dealing marketplace in Europe, we could also say that possibly a lot of the activity that happens occurs at the night session during the London Open, between Frankfurt and London Open, and up until approximately 5 o'clock Eastern Standard Time in the foreign currency. And we went through that, and you will find those hours of trading references and the peak time periods for trading in a foreign currency in your course manual, by the way. So it was interesting to note that we really didn't see that many patterns develop for the pound, but we want to heighten our awareness because they actually do occur. 13% for a doji low, 17% for a doji high. So 34% it would be a hammer low, 36% a shooting star high. That's why we want to focus on different markets, different patterns, and how they relate to different markets. But I thought it would be interesting to see a computerized study, a backtest study. Incidentally, that study dated back 1 year, 255 trading days on 15-minute intervals. It's a lot of studying and recent history, and I got news for you, friends. That, in the last year, 2005, was one of the most volatile trading sessions in foreign currency history. So I think that with globalizations, the globalized economies, with interest rates on the rise across the spectrum of different countries and central banks raising rates, I think it was kind of a neat study to see how relevant technical analysis is, in addition to how relevant it is with candle patterns. Now, here's the blast off, the benchmark, or what we call the pillars of strength, as I mentioned in my first book, The Complete Guide to Technical Trading Tactics. First off, it's commonly known as a Marabuzo. It's a long real body with little or no shadows at the bottom or top. It's also what we call closed cut, or a shaven head, or a shaven bottom. Now, it's not hard to recognize this candle. It's right here. That is a true benchmark or blast off or Marabuzo. It's also a candle that conforms with engulfing, because the real body engulfs many time periods real bodies, as you see here. So it's an extremely strong pattern. Most people find it difficult to trade because they do one of two things. They either buy the breakout and the market regresses or returns and then they get scared out and they go short thinking it's a 2-bar reversal, and it isn't. This is a special candle. It's to be treated differently. And